You mean what's the cost to refinance?
How much does it cost to refinance your mortgage, and at what point is it worth it? When you've gotten a mortgage and rates start going down, you start to wonder at what point is it going to be worth it for you to refinance. In this video, my dad, who's been in mortgage for 25 plus years, is having a conversation with a client, and he's explaining some helpful input for someone who's in this exact situation.
It's a hard question to give a real straightforward answer because, what I like to, how I like to answer it is there are probably somewhere around $4,500 of inherent costs in the refinance. But what happens a lot of times when rates are going down, they're going down fairly quickly and consistently over a longer period of time. You take someone that's got a 7% interest rate, and now today the going rate is 6%, and that same person could pay $4,500 and get 6%, or they could pay nothing and get 6 3/8. And so, of course they're paying for it in terms of opportunity costs. They could have got the lower rate, they could have paid the cost and got the lower rate and potentially benefited from that over time. But there's that kind of risk-free option of just saying, okay, I'm not going to pay anything out of pocket. I'm just going to take the lower rate, not even out of pocket. It's not going to cost me anything except for I'm taking a higher rate than I could otherwise have gotten. But all my fees are covered by the rebate because I took 6 3/8 instead of 6. And so, so that's, and a lot of people do that in those refinance markets, because it's a safe way to do it. And then if rates continue to go down later, they're not in it. They're not out anything. They haven't spent the $4,500, and now they're down again, and now they're looking at spending another $4,500 to get it lower again. So, yeah, that's generally how we counsel people. Yeah, I mean, I would say maybe closer to 4. And when you're borrowing $600,000, if you're saving a point on $600,000, you're saving $6,000 a year in interest. So it doesn't take very long at all for that, for you to break even on that, for those costs to be more than offset by the reduced interest costs.